Hi, I'm licensed Nevada foreclosure consultant Damian Falcone, and this is part 1 of the loan modification video series. In this series, we'll be talking about the elusive loan modification, what you need to prepare, who you need to correspond with, and the added details that can be the difference between you receiving your modification and having to find another solution. This is part 1, and we will focus on your preliminary approach to the loan modification. In part 2, we will talk about the documents you need to prepare and how to handle your initial conversations. This is Get Modified, your source for loan modification and foreclosure prevention information. As always, for even more information, go to www.falconcreditmanagement.com. Loan modification is like most other things you would like to achieve. You need to understand it, establish your goals, make a plan for achieving those goals, and put in the time and effort to effectively complete the process. Your mortgage servicer will be processing most, if not all, of your loan modification information. Your servicer is the entity you receive your monthly mortgage bill from. They are looking at your modification as a loss mitigation strategy. And if you haven't watched our series on loss mitigation, this means the bank is at risk of losing money on your mortgage, or maybe already started losing money and is willing to consider a loan modification, as well as other workout options, to limit their loss. Part of the bank's evaluation is done based on their own financial situation, appetite for risk, current real estate or mortgage market conditions, and the legislative climate. The other half of their evaluation has to do with you and how you appear as a borrower. Evaluations of borrowers typically focus on creditworthiness or perceived risk to the bank and financial hardship, similar to if you were going to lend somebody money. Almost anything can be used to evaluate creditworthiness or potential risk, which is discussed in more detail in our credit reporting series. But we can sum it up by saying, whenever you have any dealings with the bank, it is important to put your best foot forward. These techniques will take more time, but if you have the time available, do everything you can as soon as you can to get the bank what they want, when they want it, and how they want it. Some of the things you can do to make it easier on your servicer are type all your documentation, even if this means retyping their documents. Provide everything that is necessary in a timely manner. Follow up when and how they've instructed you to follow up, which could be by phone, email, fax, certified mail, and on a specified date. Or if they don't specify a date or time, ask and be sure to follow up then. Banks are expecting to approve at least millions of applications a year for the next few years, and it is safe to assume they aren't going to approve every application. So I recommend making it as easy as possible for the bank to process and approve your application. These were the key items in understanding your approach to a loan modification. In the next episode, we will discuss preparation of financial documentation. I'm Damian Falcone, and this is Get Modified.